Hey everyone, welcome back to Corporate Decoder, the place where we dig into the guts of corporate America and see what really makes them tick. Get ready because today we're looking at Sable Offshore Corp. And let's just say they're navigating some choppy waters or maybe steering their ship in a new direction altogether. Before we dive in, if you like getting the real story behind company filings and not just the PR spin you'd normally get, make sure you're subscribed. We've also got a fantastic community over on Discord. The link is in the description below, so join us there to keep the conversation going about all things corporate finance. Alright, Sable Offshore Corp is making some big updates to how they plan to get oil out of the ground and where it's going. It all happened on the 9th of October 2025 when they told the US Department of the Interior S Bureau of Ocean Energy Management, or BOEM for short, about their new plan for the Santa Ynez unit. Now, Sable Offshore Corp is the company we're looking at, and they've been working on this plan called the Development and Production Plan, or DP. Basically, it's how they intend to produce oil from the Santa Ynez unit. This updated submission is packed with info about activities they are already doing and some extra operational details. It's like they're giving a progress report, but also saying, hey, here is what else we're capable of doing. This approved DPP has a really interesting option in it. Sable can use a special ship, an offshore storage and treating vessel, or OS timed ET. For short, this vessel can process the oil produced from the Santa Ynez unit. Imagine a floating oil processing plant. The oil gets loaded onto smaller ships called shuttle tankers, right there in the ocean, off the coast of Santa Barbara. From there, the oil can be sent to refineries all over the place, except for California as an alternative to trucking it through a pipeline. This offshore option is a big deal because Sable has also been trying to get the onshore Las Flores pipeline system back up and running. This pipeline is the traditional way they would get the oil to refineries in California. Sable says they are working hard with the state of California to safely restart this pipeline following a federal agreement. But, and this is a big but, if there are more delays in getting the green light for the Las Flores pipeline, Sable basically says they will fully switch to their offshore processing plan, the OS-2T strategy. It sounds like they are keeping their options open but are ready to fully embrace the offshore route if the onshore one remains blocked. Now, let's talk about how Sable Offshore Corp is structured and traded. Their common stock, with a par value of practically nothing, just 1/10 of a cent, is traded on the New York Stock Exchange under the ticker symbol SOC. This means that the company's shares are available for anyone to buy and sell on one of the biggest stock exchanges in the world. It's also worth noting that Sable Offshore Corp is categorized as an emerging growth company. This means they are a relatively new company, and as such they have certain regulatory accommodations. They've checked a box indicating they have not opted out of the extended transition period for new or revised financial accounting standards. This essentially means they can delay adopting newer, stricter accounting rules for a bit longer, which is pretty common for younger companies. Under item 8.01 of their filing, which is typically for other events of material importance, Sable discusses these updates to their operational plans. This section is where they officially announce significant developments that aren't covered by other specific reporting categories. It's a catch, all for important news that investors and the market need to know about promptly. This report is officially signed off by Gregory D. Patronley, who holds a very important title as the Executive Vice President and Chief Financial Officer. This signature signifies that the information presented in the report has been reviewed and approved by a top financial executive within the company, confirming their commitment to the disclosures made. The date on this signature, the 10th of October 2025, is the day after the report's earliest event date, which is standard practice for official filings. Okay, so what does all this mean? Sable Offshore Corp is clearly facing a significant strategic decision: push forward with the long-delayed onshore pipeline in California or fully commit to their offshore processing and storage solution. The fact that they submitted an updated plan to BOEM and are clearly signaling a pivot to the offshore OS-Teent strategy suggests they might be losing faith in a timely restart of the Las Flores pipeline. This offshore route, while potentially more expensive or complex in some ways, offers them a way to bypass the persistent regulatory hurdles in California and get their oil to market. From what we can gather, the strategy seems to be about flexibility and resilience. They are demonstrating they can adapt to difficult circumstances. The risk here is pretty clear. Continued delays with the onshore pipeline could force them into a more accelerated and potentially more costly offshore strategy. However, the opportunity is also significant. They could unlock production and revenue streams that have been stalled and prove the viability of their offshore solutions. It's a bold move that shows they are prioritizing getting their operations moving, even if it means a significant shift in how they do business. For now, it looks like the OS by T is becoming Sable's primary focus. Alright, that is our breakdown of Sable Offshore Corp, CES latest filing. What is your take on these numbers and what they signal for the company? S future, are they strong or weak? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.